Is there any sort of seasonal aspect that should be taken into consideration? Normally, do people feel more bullish at this time of year, so the put-call ratio may not be this high? I'm just curious if there's any, history on that.
I think in general, people seem to really be taking risk off the table heading into the year. And we're seeing that in several sentiment indicators. The AAII survey recently showed bearish sentiment hitting a 9-week high, margin debt levels hitting the lowest levels since July 2020. So I think this time around, it's tough to compare with prior years, given that Wall Street is looking at the worst year since the 2008 financial crisis. And across the board, it looks like people are reluctant to take big risks out there before they close out the year.
Yeah, it is amazing too, Gunjan, and you know this more than anybody, that options trading has been so active this particular year. And the top 10 put trading days in history have happened in this year. And I'm wondering if that gives the put-call ratio any more credence, just because such high volume is behind it.
That's right. I mean, the market has been booming this year. And I think going into 2022, if you had known that the market was going to be down this much, I think a lot of people would have said, I think people are going to back away from some of those speculative bets. But what we're seeing is that people are still, hungry to trade options. Volumes are on track for a record. And, the fact that the top 10 trading days for put options in history have occurred this year just shows you this huge shift that's occurred in the market. Because, what was trading last year? It was calls. People wanted to make those big YOLO bets on GME, AMC, on tech stocks. And instead of that, we're seeing people kind of take a more cautious stance in the market. And that's leading to this really high put-call ratio.
Yeah, volatility being sort of dampened this entire. I mean, it's amazing to think that the VIX right now is at 21, so premium's really cheap. It's cheap to take a bet. People aren't reaching for bullish positions; they're reaching for bearish, Gunjan. But volatility being muted, I'm sure, plays a role as well in terms of people trading options. It's cheap.
That's right. I mean, volatility may be muted, but think about these huge one-day moves that we're seeing, right? Like after CPI, after Fed days, in November alone, the NASDAQ, had 3% days, 5% days. Some of its biggest moves in history occurred after the CPI meeting, after the Fed meeting. Think about the huge move that we saw in Tesla stock yesterday. So these types of one-day moves create a ripe environment for options trading. And I think that's led to some of these elevated volumes where people are, stepping into the market to maybe just play a one-day move, play a move through Friday of this week.
Since we have you, what do you make of the Tesla move? We saw an 11% decline on very heavy equity trading volume. It was like 3 times the average daily volume for the past 30 days, Gunjan. I'm sure in the options market, it's typically the top traded option in the entire U.S. market. What are you seeing there?
I mean, Tesla options are one of the biggest casinos on Wall Street and Main Street. That is a favorite among options traders, and volumes have still been elevated this year. What is interesting is that Tesla options have still been really popular this year. Tesla stock has still been really popular this year among individual traders. It's been one of the top buys among individual traders. So the stock left, the 10 biggest U.S. companies by market cap yesterday after that 11% slide. But it's fascinating to see it kind of retain its popularity among this investor base. And I think a lot of people are looking at this stock and saying it's down 50, 60, 70%. This goes for Tesla and the mega caps. Is it undervalued now? And I think that's one of the biggest questions facing investors right now.